Hi, everyone. It was basically another do-nothing day for the stock market. Looking at the New York Stock Exchange, you can see that we were down 0.44%. Volume was slightly higher than the day before, but still well below average. The 10,656 close is barely above the 10,639 open. So for now, we are good there, but we need to watch and make sure that we hold the lows. Same with the S&P 500. While it was down today, it still hold above the gap up open lows. Same thing with the Nasdaq, the Dow Jones Industrial Average. They all pulled back on below average volume and are holding above the gap open lows. The only trouble point is the Russell 2000. That index looks extremely weak, and we remain under a sell signal on that one and the Nasdaq. Don't want to spend too much time on the video today. I have no sells, no partial sells. I have two new long signals. Both are 5%ers. CBG, after a great earnings report, consolidated sideways very nicely in a tight round range. It's now breaking out with a pocket pivot point signal, a surge in BOP and volume with technicals aligned really well. It's a high quality, fundamentally sound stock. So it's a good long despite the market what it did today. We won't be losing much if we are wrong, and that is the good news. It is a 5%er. I also got a long signal in MTX, which is part of the chemicals group, which is also doing very well recently as a New York Stock Exchange stock. It's giving a very strong signal off the 50-day moving average. Once again, if we're wrong, we can easily cut our losses. There's a surge in BOP, MACD, TSV, BOP. Money stream and relative strength all look good, so all is good on that end. And I'm going to go and wrap up the video. And while I do, I want to remember while I'm looking for a top, I was looking for a crash, and still I'm looking for a crash. Look at this leg up off the 08 to the 2014 high. Same with this level. We have a broadening formation here, and that's never long-term bullish. Still, that being said, the yield curve is the second most important thing to me for a bear market. High PE ratios is number one. A tightening Fed obviously is also number one. Tightening Fed, high PE. But to see the yield curve going into the top in 2000, see the yield curve going into the top in 2008, 2007, 2008, and you see the yield curve now? We're still nowhere near to be inverted, and to be honest with you, bear markets normally come about with high PE ratios and an inverted yield curve. So the fact that we don't have that yet suggests to me that we could easily keep going higher, and it makes sense here with the market, still going up and not refusing to sell off here. So until we see a really inverted yield curve, good chances are we do have further upside to go. The only one stock that's been working for us, the intraday plays today were crappy. I wasn't into any of the stocks that were played today. Low volume, thin, and or industry groups that are not leading, not interested in. The one stock that continues to work, though, we know some people that were able to get short this stock. We recommended shorts in between 66 cents and 80 cents. The stock is now trading at 10 cents. In 1, 2, 3, 4, 5, 6 days. 6 days, it's gone from 66 to 80 to 10 cents. And this is what we'll look to continue to play while our long-term end-of-day trend following signals remain pretty much mediocre to not good at all in this QE environment. Thank you very much. Aloha.